So today, guys, we're gonna be talking about dividend investor, dividend investing, dividend investing, dividend investment. Yes, dividend investing. But hopefully by the end of this video, I can persuade you guys who are new to investing that maybe you wanna try out dividend investing first before anything else. Let's get started. What's going on, guys, and welcome back to another All About Investing for Beginners video. My name is Darren Jackson, and I hope you're having a great week so far. If you're new to my channel, welcome and thank you for watching. And if you're not, then you're probably used to watching my videos and hearing me say a lot about dividend investing or long-term growth in dividend investing or DRIP or anything that has to do with me getting paid to own stocks. So that's the subject for today. I want to talk about dividend investing and why I feel like it's beneficial for new investors. More specifically, guys, we're going to talk about what a dividend is. We're also going to cover the benefits of dividend investing in my personal opinion. And then as a little goodie, we're going to talk about 3 different stocks that I personally would have loved to have invested in as a new dividend investor, and stocks that I feel like you should definitely consider investing in as well. This intro was a little bit quicker, but I just want to get straight to the point, so let's get started. Okay, so for starters, what is a dividend? So to put this in simplest terms, a dividend is basically a percentage of a company's earnings that they reimburse into their shareholders, whether they pay it out annually, more commonly quarterly, or pretty rarely on a monthly basis. Now, a few things you want to remember about dividends is that not all companies actually pay dividends. You're more so going to find that the companies that pay dividends are well established, they've been around the stock market, and they just existed in the world for a long period of time. They're more profitable, so they're not in debt or anything like that. And another thing that you want to keep in mind is that for the companies that do pay dividends, not all the companies pay the same exact percentage. It honestly varies based off their preferences and how much they can afford to. So for example, a company like Apple, that's one of the biggest tech and just overall biggest companies in the United States and maybe even the world, only pays below 1% in annual dividends per share stock from an almost $400 share. But the reason they do that is because they're such a popular company and they know that people are going to invest in the company because they're profitable and they're well established. So they know that people are going to invest in this company just because they know they're going to make money back from the capital gains. But at the same time, they also want to thank their shareholders for investing in their company and more importantly, persuade them to continue to not only invest whatever shares they currently have into Apple, but to gain more back. So you have companies like that, but then you also have companies like AT&T, where each share is significantly less at roughly $30-ish right now, but they offer almost a 7% dividend yield, which is more attractive because it's a higher number, so you're expecting more opportunities to get money back, and since it's cheaper, you can get more. And the one other thing you want to remember when it comes to dividends is that every company has what's called an ex-dividend date. Basically, it's the date that you have to purchase the company by. Well, actually, you have to purchase the company before the ex-dividend date so you can reap the benefits of the actual dividend that they pay out. So as long as you buy the stock beforehand, then you'll get it. If you buy it the day of or after, then you'll receive dividends, but not for that upcoming month, but you'll receive them for the following month. So now that you guys hopefully know a little bit about dividend investing, let's go to some of the benefits that you may already know of or may not know of. So for starters, one of the big benefits of dividend investing is that you are experiencing true passive income. And for those of you who don't know, passive income is essentially income that you receive for doing little to no work. And the amount of work that you're doing for dividend investing consists of essentially 2 different things. Research, which we'll get into in a little bit, and investing in the actual company, and maybe some follow-up research in between time. But aside from that, that's essentially it. You're investing into the company and you're just waiting. It's as easy as that. My current stock portfolio pays me roughly $100 a year, and saying that the numbers stay the way they are, I don't have to do anything, and I'm consistently making $100 a year, which is not a big number, but for not doing any work, it's pretty nice if somebody hands you an extra $100 just for being there. So there's that. And the second thing that I feel like makes dividend investing super beneficial is what I previously stated briefly in the first statement. It requires little to no research. So you have different types of investment styles that range from options trading, penny stocks, and day trading, which requires a lot of intense research, from what I've seen at least, at the very beginning before you invest in a stock, and especially during the process of investing in the stock. Just notice the gains and the losses to know when to sell out and other things like that. But with dividend investing, you're doing your research prior to investing in the company. So what the company is about, their mission statement, how much the shares of stocks are, the dividend percentage, and other metrics like that that we'll go into complete detail, hopefully in another video. And then based off the history of the company, that might be it. You buy the stock, you get dividend checks, and you just keep going. Especially for a company, for example, Johnson & Johnson, who's been paying dividends for almost twice my lifetime and consistently growing at the same time. So you can be pretty confident that you can invest in a company like that and really never have to look at it again. But obviously you want to look at it a little bit, hence why I said you want to research a little bit in between time. But I feel like that's definitely beneficial for a new investor because the things you have to research are pretty simplistic, and especially if you don't have a lot of time, you're not spending too much time doing the research. And for a little goodie, especially if you've made it this far in the video, I want to share with you guys 3 different companies that I personally wish I would have invested in at the very beginning when I was learning about dividend investing. Hopefully you guys consider researching into these companies and adding them to your stock portfolio, hopefully as the very first companies that you're investing into. So the first company that I feel like you should invest into is a company called SPHD, which is a Standard & Poor's high dividend stock. It's an ETF, which is basically a basket full of shares. I'll actually link a video up above that goes into details about what ETFs are, but I may make a new video about that later on to add to this playlist. So anyway, this company ranges at about early 30s per share. This is a company that from the S&P 500 takes the top 75 highest dividend paying companies, and then from that takes the top 50 lowest volatile companies. So you have very low volatility, which in a sense is a good thing, and a pretty high dividend yield. I don't remember off the top of my head, but I'm pretty sure it's maybe 5 or at least 6% in dividend yield, which pays you about 15 cents per share per month. Yes, it's a monthly dividend share. There's not a lot of these companies in comparison to the quarterly ones, but I feel like this is a company you definitely want to invest in because the volatility is fairly low since you're investing in a particular stock that represents 50 different companies. So if one company fails, you're not really impacted that much because that's only a 50th of the entire stock itself. Investing in SPHD is essentially investing in one stock that creates a stock portfolio within itself. So definitely check that out. Speaking of monthly dividend paying stocks, I just said that they're rare and I'm listing another one right off the gate. Realty Income is a company I feel like you should definitely look into investing in right now. I think they're worth late 50s to early 60s a share at this point, and they are known to be a monthly dividend paying company. They own tenants such as Dollar Tree and Walgreens and other places that you've probably seen before, but they've been paying dividends for a long time, and I think they've increased their dividend yield, the amount they pay in dividends, for the past 300 quarters consecutively. So this company is super valuable in the sense that it'll pay you and you have the opportunity to make even more money in dividends just from holding the funds. So definitely look into that company as well. And the last one is Coca-Cola. We all know what Coca-Cola is, one of the most popular soft drinks. They also own Dasani, Minute Maid, Powerade, Fanta, a bunch of other things like that. They are a company that's known as a dividend aristocrat, which is basically a company that's increased their dividend payout for at least 25 consecutive years. They're going on 57 years. So investing in this company is really safe as far as the dividend payouts. Now, this company shares the characteristics of a lot of other companies in the sense that it pays quarterly, but it pays about 41 cents at this point per quarter. So it is only a quarterly paying stock, but considering that quarterly payout is fairly high per share and that each share of Coca-Cola right now is roughly early to mid $40, and considering the history of the company itself, the popularity of the company, and how long it's been paying out its dividend yields and increasing them per quarter or per year, is definitely another stable company that you want to invest into. All these 3 companies share a characteristic of being very steady and safe and not too volatile, which I feel like is very important for a new dividend investor because, in my personal opinion, the more volatility a company has, the more research that you're gonna have to do within the company, because volatility works both ways. You could go to bed one morning and wake up the next morning and your share of company X increased by $20, which is amazing. But then another night you could wake up and it decreased by $20. So having a company that you know isn't super volatile essentially means that no matter if you make some gains or some losses, they're not gonna be super intense, but you know, in the meantime, you're getting dividend checks, and overall, from when you purchase a company to when you sell it years later, you're making some type of profit from capital gains aside from anything else. So hopefully this video helped you out, and make sure you guys check out some of these other videos if you're ready to learn a little bit more from more, I guess, advanced dividend videos. I hope you guys enjoyed this video. Leave a comment if you have any questions or concerns or anything like that. But until next Thursday, take care.